You are listening to Been There, Done That. We present some of the smartest people connected to the business of coffee. People who've succeeded in the tough grind of hospitality by staying ahead of the rest. So join us as we explore the secrets to their success and help you accelerate your business. This show is brought to you by the Coffee Commune, where the coffee community comes to collaborate. Enjoy the show.
Hi, Phil DeBella here from Been There, Done That podcast, brought to you by the Coffee Commune. And today we've got a wonderful guest I've known for a long time, Mr. Barry Wilkinson from SW Brokerage. Barry, welcome to the show.
Thank you, Phil. Pleasure to be here.
So I've known Barry for a long time, but let me give you a bit of a bio on Barry because we're going to talk all things finance today. It's a real hot topic at the moment, and we want to explore it a bit further, what it means for people out there in business, and especially in hospitality. So Barry's been the last 18 years working for himself as a mortgage broker, helping clients navigate the lending process with a focus on more than just sharp loan rates. He prides himself on amazing service, and he looks after the clients to make sure he gets the best outcomes. He sees his role as part of his clients' financial team, spotting opportunities they might not recognize and guiding them towards stronger financial outcomes. He actually began his career with a major lender, but soon transitioned into broking to access a wider range of loan products and better match clients with the right solution. Barry believes in building long-term relationships. He's one of the best I know at it. He stays in touch and ensures clients' loans continue to support their changing needs and life stages. Over time, Barry has naturally stepped into the role of a financial coach, sharing budgeting tips, encouraging goal setting, and helping people pay down their loans faster. His advice is simple but powerful. Write down your goals, 1 to 3 years, 3 to 5 years, and consistently work towards them. And more importantly, know what your financial situation is all the time. Barry, welcome.
Thank you, mate. I appreciate it.
So give us a snapshot of SW Brokerage. Tell us a bit about what you do, what your clients look like, what makes you relevant in the marketplace.
Relevant would be education, knowledge, and understanding how to navigate through the matrix. Over the last 18 years, you mentioned mortgage broking. I don't really like the name mortgage broking. It's funny. I just spoke to someone about updating my bio. Yeah. It's more finance broking. Yeah. It's more of a holistic approach. Yeah. So SW Brokerage, its pillars are residential, commercial, and business. It was founded predominantly on residential. That was our bread and butter. Yep. And over the last 5 years, it's evolved. It's changed.
And what sort of percentage now would you split across?
I would say 60%, 65% would be residential. Yes. The others would be business and commercial. I'll tell you why that's happened. 75% of the market go through mortgage brokers. Entry level to becoming a mortgage broker is too easy. So the standard isn't the best out there in certain areas. So banks, commercially, brokers, 45% only go through commercial through the banks. Yeah. Through the mortgage brokers. So there's a huge gap there. And why? Because a lot of brokers don't understand how to read financials or how to negotiate with a client or identify weak parts within their business that they need to find a solution for. So I saw an opportunity there, and we do a lot more we do a lot more commercial than what we used to, and business solutions.
Is that the growing part of the business?
It is. It really is, actually, and also small businesses and Medico and SMSF.
Okay.
So
and explain SMSF.
Self-managed super fund, where you can purchase a property. Like if you're the business owner, Phil, you own the Coffee Commune. If you want to purchase this building, you could purchase it within your self-managed super fund. Yeah. So people that have a business out there that have got cafes, small business, and they're looking at, increasing their wealth and purchasing where they work, they can actually do that through their super.
So the fundamentals, obviously, of your business is service-based, right? Because, for many years and still are, a lot of brokers are just reactional, right? You go, I need money, you go to somebody, fill out the forms, do this and go see what you can do for me. Well, you guys take a real proactive approach.
Well, it's very much robotic, right? So over the term of being a mortgage broker in the last 18 years, there's a lot more compliance. So for your listeners out there, my recommendation would be, if they're looking for a finance broker, because that's where it is now, is making sure that you look at their website if it aligns with what you're after. 2 would be having a look at their Google reviews, right? And 3, looking at the term of the experience from the finance person that you're dealing with.
Yeah.
And asking those, hey, do you deal with this? Yes, you do.
Yeah. And building and somebody who can hold relationships, right? I mean, I know you've done some work for us and some clients of ours, and I mean, everyone keeps coming back and they love doing business with you because of the emotional engagement, because of the humanity you bring to it, right? Because banks, and we'll talk about that, but banks are a pain in the ass, right? Their compliance has gotten a lot harder. What they want people to do is terrible, and the system hasn't changed for a long time, and it's something I do want to unpack after about,
where it's going.
The fact that they still want, you got to have X amount of equity, and then you've got to have X amount of serviceability and all the rest of it. But we'll talk about that later. But before we do that, give us a snapshot of the current finance situation in the economy. So, from your experience, you're mixing with people, from low stuff to high stuff, from residential to commercial to businesses. What do you find? Give us a snapshot and overview.
A lot more acquisition for you're finding people are looking at purchasing more. Yeah. Interest rates are going to be coming down. Cash rate, they think, will be around about 3.1% by the tail end of next year. So that should mean roughly interest rates on a residential sense should sit roughly around about 4.6 to 4.5.
Which is very low.
Which is low. So how long they'll stay there, I'm not sure. Commercial is slightly a little bit different in terms of slightly higher. They're not looked at the same view. Just for your listeners out there and people listening, residential lending and commercial lending
are two different beasts.
Completely different beasts.
Because of the risk associated.
Correct.
So people understand
Residential can be somewhat like cookie, you fit these boxes. Commercial can take a different view, okay? So general rule of thumb is that's really, really important to remember, because commercial, traditionally with the banks, what you are finding at the moment, their policies are becoming a little bit more lenient. Because you're starting to see a lot more other options in the market, private lenders are starting to come into the realm. You're finding other lenders out there that can do 6 months. We can look at your 6-month transactional statements, lend up to 80%, take away your expenses, and they'll give you a line of credit from that. Mm-hmm. A bank, mate, good luck.
Yeah.
Anything under 100,000 to 200,000, big banks are like, look, you're probably better off going down that path. So to answer your question, I do think money is easier to come by. It just depends on the rate that you want to pay for it.
Yeah, and it's a good way to put it, right? I get asked all the time, obviously through the Commune, we're approaching 1,700 members. You'll find that 99% of them have got loans, obviously, or multiple loans. They need money. And it's the question that everybody always asks, can I get a loan? Well, you can. It just comes down to what interest rate you're prepared to pay, because it's all about risk, right?
It is, and I look at it from a three-prong attack. You've got first tier, second tier, third tier. First tier is your traditional banks. Second tier are your other banks like, your Liberties, Latrobes of the world. Big banks, but have a different appetite. It all comes down to a bank's balance sheet.
Yeah.
So that's what people need to remember. What is a balance sheet? What's your assets? How much exposure you've got in certain areas? Well, we don't want that exposure. Whereas another lender who is smaller is okay with that exposure. They'll tend to put maybe like a GSA, which is a general security agreement, over your business.
Yes.
Or they'll look for security.
Which is fair enough.
Yeah. So it fundamentally commercial comes down to security.
Security. Yeah.
How can I give you the money and get it back from you?
Yeah. And you've explained that well. And for the listeners, and that's why it's important that you go to Barry, somebody like Barry, SW Brokerage, you go to them and you say, guys, this is what I need, and you let these guys reverse engineer. I mean, you did that with us when BDO said to me, I need you to finance, some of your roasting equipment. And we came to you and said, right, this is the amount, we don't want any bullshit. And long story short, you said, right, this is how much you got to, you finance so that it ticks this box, it ticks that box. And here's the rate. And what I was mesmerized, which is my bugbear with banks, and we'll segue into it, is about the service quality, is that I've been with NAB since I was 17. I'm 50. I haven't never changed banks. The first time I used a different bank was with you, because Westpac came in and I think it was 1.5% cheaper. Yeah, not a little bit. It was 1.5% cheaper on a $500,000 machine, and it was only part payment of a machine. It wasn't even the whole expense.
Well,
right?
It comes back again to the balance sheet. So that's probably Westpac's appetite would be like, hey, this is our way to get people in. So just go back a step, right? The reason why the increase of with the demise, the branches, I think, up to 2,000 branches now Australia-wide. To the defence of the banks, that's the only thing I will defend them of, is the quality of people that hang around the banks is few and far between, right? So the protocol for experience can be somewhat a little bit less more experienced as a bank than as a broker, because someone that just walks into a commercial part within the bank typically doesn't have the experience out there that a broker
would have. Yeah.
brokers, in all honesty, if you're going down that path, whether it's SW Brokerage, you'd be mad not to use us, but SW Brokerage, in all honesty, or a broker out there, mate, I've got a good mate of mine who's a mortgage broker, wouldn't even know how to read financials, wouldn't even know how to do an SMSF, and he's been doing it just as long as me. So you need to make sure they know what they're talking about. Yeah. So I'll give you a quick example. Dealing with a company at the moment, they're turning over 45 million a year, right? Mm-hmm. Now, for your listeners, they're probably thinking, "Oh my God, that's amazing," but that's not me. I'm not trying to make a parallel between someone who's turning over 400,000 to 45. The problem is with these businesses, with rapid growth, they need funding from the house, and that is the banks. So you either go through the levels, either level 1 or level 2. These guys, because we need rapid growth, the financials weren't there. They were winning all these contracts, so they needed rapid growth put on staff. Well, we had to go to a second-tier lender. Interest rate wasn't as more attractive, but it provided them the money to then convict the work.
Which allowed them to grow.
Correct. Then what we do, we're now back into a traditional lender. Now we're back into good interest rates, but I work with the accountant. I work with the owners. And this is the biggest bugbear of my existence with business lending and commercial.
Yeah, because the question I was going to ask you, which you've virtually answered, but I'll let you add to it, is at what point, anyone listening to this, at what point should somebody say, I'm going to a broker versus going to the bank?
Well, if you haven't, number one, don't wait until shit hits the fan. Don't wait. Be proactive, right? And I learned that myself. Be proactive. Work closely with your bookkeeper. Work with the bookkeeper.
Make sure your financials are in order.
Well, yeah, and I'll get to that in a second in terms of at what point. Now, my understanding would be get a bookkeeper to give you a snapshot on your quarterly, 6 monthly, 9 and 12 month. Analytically go through it and look at where the behaviour is, because it all comes back to behaviour. Well, at that stage, you're like, okay, well, what are my plans? 1 to 3 years? What are my plans? 3 to 5? Okay, I'm going to need a solution to borrow money. That is your point then and there where you need to think about a broker. Going, I need someone, because I haven't got the time. Yeah. Because time, as you well know, you tell me this all the time. I got this from you. It's the biggest commodity. So I haven't got time. I want to make money. I've got to see clients. I've got to run my own business. What time? Rule number one, you go through that and go, well, I need to trust someone implicitly to sit with me. And if they align with you, intuition-wise, you understand everything that they align with, that's when you need a broker, would be my understanding. Rapid growth, or number one, if shit hits the fan, you're running out of money, robbing Peter to pay Paul, you still need a broker. Banks will not banks take a dim view on that. Now, if you're going from a 5 million to 10 million, or you're incrementally significantly increasing your income per year, you need to be aligned with an A-grade bank. 100%. Because they need to know your appetite. Because commercial is based on relationship. Yeah.
And what sort of fees? So if someone's thinking, hey, does it cost me money to go to a broker? How does that work?
Well, it is. We're the conduit between you and the bank, right? So we hold the bank at ransom because we've got access to other banks.
You do all the negotiating.
We do. Right? So I'll give you a prime example at the moment. Mechanic buying a property at the moment that we're helping him with, about 2.5. Buying it in his own name, not an SMSF. So if he goes directly to a bank, then he only gets that one bank. When he engages us, we put it out to tender to around about 3 banks. Now we do charge $2,000 for that because there's a hell of a lot of work in it.
Someone's going to cover the time.
Then what happens is then the bank and I will then negotiate an establishment fee. So we get paid by
the bank. Yeah.
We do get paid by the bank, but the client actually does pay that to us as well, part of the establishment fee. Yeah. Now, what happens? Why that happens? Well, number one, we will charge the client a fee, but number two is that ongoing, he gets that relationship. We work with his accountant. We work with his financial planner. I've set him up with an insurance, Stellar Insurance, who is used. Yeah. So he's buying us.
Yes.
He's buying that little conduit and that little group.
Yeah, he's getting the service.
Correct. So in 3 years' time, we go back every year, and this is fact, we go back every year to make sure that the client is being serviced by the bank. Interest rates, we will negotiate for the bank as well. If the bank is not holding to the standard that they first came in through the front door 12 months ago, mate, it's easy for us to pick up and move.
Yeah. And the other thing too is he goes to the bank direct. He's just one customer. Yeah. Whereas the banks aren't going to piss you off because, 100%. That's a difference. They say, well, you've got 100 clients or 1,000 clients. We want you to bring it our way. So
another guy that we're helping at the moment, right? He owns a Coles stores. So it's about a $12 million transaction at the moment, right? Now that's big. A lot of people out there thinking, oh my God, you must make a lot of commission. No, we have to negotiate quite a bit, right? So what happens is the biggest bugbear for a lot of these people is the valuation it's going to cost, right? So the valuation is quite high doing a commercial valuation as opposed to a residential.
4,000 or 6,000.
Depends on the price, depends on the type of property, depends on the complexity of this guy got cold rooms, right? So it's huge. There's a multiple sites as well. So that could cost him up to around about 10 grand.
Yeah.
I can't negotiate that. However, I can negotiate rate.
Yeah.
I can negotiate price. I can negotiate what they call a line fee. So banks obviously have their margin as long as you know their margin. And this is probably the most pivotal part for people that are listening. You don't know what the bank's pain point is of where they have to stop.
Yeah.
So I rang the business banker because we've all got a relationship with him. I won't mention his name. I'm like, if you do not give me a cheaper establishment fee, I am not coming back to you because this other guy wants to buy more.
Yeah.
He's got a portfolio. He wants to get to about 40 or 50 mil.
Yeah.
I'm not coming back to you. And you know those financials stack up.
Yeah.
So what happens is he then goes back to his estate manager, comes back and goes, Barry, I'm going to get rid of 60% of those fees. Yeah. Now, I'm not going to sugarcoat it. It was still expensive. But
it's 60% cheaper.
It's 60% cheaper.
Yeah, and that's
because I know the pain point.
And that's the difference, right?
Correct.
You're actually going to a specialist that then goes out to the market. And that's the way I always explain when people ask me what's the difference with you guys. I said, they actually work for you, not for the bank. They make the banks work for you. And as we know, banks aren't there at the best time. So give us a snapshot of where banks are. We are fortunate. I remember Richard Branson once saying Virgin Money didn't work in Australia because we've got 4 of the world's best banks are here right in one country. So he said he calls it the gap in the ceiling. There was no gap in the ceiling for Virgin Bank to come in and change everything up because there wasn't much of a gap, there was no opportunity because 4 banks, our 4 banks are in the top 10 in the world, which is pretty phenomenal. So give us a snapshot of what you think about, the majors and then the second tiers and your pick from experience for different reasons. Yeah.
Who I'd pick right now?
Yeah. For different reasons. So if you're in residential, who would you pick and why? At tier 1 and then in tier 2 as well, just to give the listeners a bit of a broad range. And also banks, it's a bit like Coke, right? Everything's, if you're ordering a Scotch and Coke, well, you don't know if it's Scotch and Coke or Scotch and Pepsi or Scotch and Schweppes Cola. You just don't know, right? It's just it's a Scotch and Coke, and that's what people do with banks. They go, "Oh, just use the bank," but they don't actually understand the fundamentals. So I want people to get a snapshot of.
So I'll break it into 3 components, right? So 1, residential, commercial. But first, I'll come to the appetites of the banks and why I think that their appetites changed. Their appetites changed because of the birth of private lenders and the second tier lenders.
Okay.
Lenders that can go, Phil, give me 6 months worth of your transactions, and then I can look at those 6 months worth of transactions and give you back a line of credit. Yeah. Just based on that.
So a lot quicker, a lot more nimble, a lot more flexible.
Go back 10 years ago. Didn't have that. No. Bank would be like, hey, Phil, I need your tax return, I need this. And you're like, man, I only want 50 grand. It's actually dwarfs growth. So what we're starting to see is, obviously, you told me this stat, I'm not going to try and claim it. We had more foreclosures last year in businesses than we had opening businesses. So what you are finding is that sometimes it can be easier for people to take money, but they don't know how to manage it because it's easy. So second to that is that you've got banks out there that have cheaper interest rates, but they just make you jump through a few more hoops. Yeah. But they don't want small lending. They want big stuff.
Yeah, they want the big ones.
They want the big stuff. So the top 4 banks, in my honest opinion, for us as a business, we will look at Westpac is our first port of call. NAB is our second port of call. ANZ's our third. Now, I'll break that up because NAB, they're good for commercial.
Yeah.
So is Westpac. ANZ, very good with Medico.
Okay.
Very good. So they own that market.
They love that space.
They love that market a little bit. Yeah, they've got a good. So that's their niche, right? So they're all finding a point where they're going, okay, anything under 500,000, a lot of the mainstream banks are connected to Xero, connected to portals, so they can actually see from an ATO perspective. And it's really important that you remember, your listeners remember this. If you've got an ATO debt, banks do not like it.
Yeah.
Which means that you are, in their eyes, insolvent because you can't afford to pay your debt. Now, I don't mean to be so harsh, but if you are robbing Peter to pay Paul, then you're going to a second tier lender.
Yeah.
Okay? So you do not want to get to that point. and for the listeners out there, the new change from the 1st of July, if you have an ATO debt, you can no longer claim it as an expense on your ATO, on your expenses. Can no longer do that.
Okay.
So it's important that people remember that. Can we consolidate ATO debt? Yes, we can.
Yeah, and you can get funding for that too.
Prime example, young lady up the coast has got her own psychology business. It's got a house. The house is worth $800 to $1 million, owes $300K. She had an ATO debt. The ATO debt per month for the expenses were 3 times the amount than she was normally paying because she had to go into an arrangement and they wanted it paid off within 12 months.
Yeah.
So they want their money, right? So she's like, well, this is going to suffocate the expenses of my business. So then we'll roll up the home loan, which was with a normal tier bank, with a second tier bank, Bluestone. Interest rate went from 6% to 7%. We consolidate the tax debt, made it all into one. Would you believe that the repayments were cheaper collectively, allowed her to continuously in her
her more
business,
cash flow over.
Gave her a cash flow, sat her in front of the accountant and then go, hey, look, I won't mention her name. You just need to know you need to work towards that for the next 12 months and reduce certain areas. So what happens then in 6 months' time? We pull her out and we put her back to a mainstream bank. She's happy as a pig in mud because in 6 months. Yeah. So
that's what you guys do. You have a look at, and that's for the listeners listening out there that have got any debt or unsure, whether it's ATO debt, whether it's, debt in your business, you're looking to expand and need money. Then, make sure your bookwork's in order, make sure your finances are up to date, your tax returns are up to date, get all that ready, and then go and have a chat with someone like SW Brokerage and the team that Barry's got. Sit down with them and say, look, I'm looking at, this is my financial situation. Because it's not also just when they want to get more money. It's also to clean up. In that example you gave us, she's been able to consolidate her ATO debt into a home loan, bring it all under one, and she ends up in a positive position when it's all put together. So in a more positive position.
But she's self-employed, right? So she's gone out and kudos to people that are self-employed because, like you and I, we are, right? It's not easy. It's not easy. The system is designed so you don't succeed. So, but go back to that third part you mentioned about the residential. Well, our top residential lenders are Macquarie, Westpac, ANZ, and we, like you might tinker with the CBAs of the world and NAB. And outside that, you got Suncorp's, INGs, right? Yeah. So for people that are out there just talking about residential, if you are below 80% and you don't have any aspirations to buy again or buy an investment property, because only 15 to 19% only have investment properties in this country, and we can talk about it another time. It's wrong. Then you definitely want to be outside the mainstream banks. 100%.
Okay.
Because their interest rates are slightly higher and their ongoing fees are slightly higher. So if you're with CBA and I'm with Macquarie and we're exactly the same loan, you would find that I'd have a slightly cheaper rate.
You'd be a cheaper rate.
Yeah, and their apps are a lot more friendly. And you anyway, I mean, look, if you had a business, you don't want to be with those banks. You probably traditionally have to be with the bank that you're going with the business.
Yeah, interesting, isn't it? And that's something, and that's why it's important for people to understand that banks are a service provider, right? Doesn't matter if they're first tier, second tier, third tier, not just banks, but lenders, call it what you want, right? But it all starts with your financial plan. So I want to segue into that because that's the space that you're starting to, and I find it the exciting part of what you're doing in your business, which is to actually get proactive and help people, the next generation, build some wealth and comes back. And that's pretty scary, isn't it? Only under 20% of people in Australia have a second property. And that should actually be your superannuation, right? Because I'm telling you now, I've always said this for years. I don't rely on the government, mucking around with super, and they're doing some pretty shit things with it at the moment. But it's the best way to create your own super is pay off your property as quick as you can and try and invest in another one, right?
Can I just give you a snapshot for 2 minutes? Okay, so as it currently stands right now, 690,000 is what a couple are going to need for retirement. That's how it stands right now.
That's base living too.
That's base living. You got no debt. Okay, well. Then you've got a independent. You've got a single, which is 550,000. So go back to people that are first home buyers. The age of first home buyers now is 29. Okay, so young person or young couple purchase a house at 29, husband and wife, or boy and girl. Biologically, the clock is ticking for a female. Okay, 35, 36. By the time you want to have maybe squeeze in 2 kids, she goes on maternity leave. You reduce your taxable income, so therefore you're just paying off that home loan. Now you're only borrowing 90% traditionally, so there's no growth really. By the time that the kids are old enough, gone to school, the wife's back at work, working full time, that you can then go from second gear up to fourth. But there's no equity in the property. Now you're 36. And then you probably traditionally want to upgrade the house, renovate the house, purchase another house, a bigger house. Well, you're going to have to sell that house to purchase something else. So the system, I go back to the matrix, you and I go down black holes and it's the matrix. So why? Who said that I just need a 30-year loan? Why can't I have a 35? Why can't I have a 40? So my thing is this, go back to the residential side of the fence. It is so critical for people to be with a broker that is prepared to work on the relationship, not transactional. Yes, interest rate is super, super important. It is, Phil, 100%. I get it. But it's also working with the right lender, the right bank to go, Phil, tell me what your 5-year goals are.
Yeah. Let's build a plan. Let's not just be reactional.
At 28, by the time you hit 35, 40, maybe 40 years of age, you might start looking at an investment property. Well, why should I get an investment property? Well, so that 690,000 is now 990,000 because you're going to need it. And by the time you hit 65, mate, you're going to have to pay off that debt. Yeah. Traditionally, it's 900K. It's a lot of debt that you've got to get rid of. So you have to surround yourself with other ways to make money, and paying off that debt is my probably suggestion.
Yeah, and good advice there, and especially. So let's get into the next generation. Tell us about what you're doing around there. We're helping young, you're working with businesses so that they can work with their staff to help them with financial literacy, help them with planning. So talk us through that.
Mate, this is something I love, right? And I love it. Well, on average as a business, we're based in Brisbane and we're based in Burleigh.
You've got kids too yourself, so it adds another element, right? You want them to set themselves up. So talk us through what you're doing.
So mate, we've got a platform where we go into organisations, we negotiate. Well, we talk to the HR departments about financial education. So they come onto our platform.
And what's it called?
And the platform's called DOSH. You can jump on the website, have a look. It's a platform that you can download on your phone. It shows you all your banking. It's an open banking. And what I love about it actually brings to the conscious awareness in terms of giving you a PDF at the end of the month, what you're spending your money on and what savings you have got left over.
And so DOSH is in DOSH?
DOSH.
Okay.
So what happens is we'll work through coming to the conscious awareness with what you're spending your money on.
Yes.
Where you want to be. So you've got all your banking, whether it's CBA, ANZ, all on that platform, and you can see it. Make a transaction, it will update within 5 minutes.
And they purchase it, or is it a license fee?
You've come through SW Brokerage to get it, right?
Yeah.
We pay for the platform ourselves. If you've got aspirations looking to buy a house for first home buyers, we can give you tangible goals and tell you where you're going to achieve it. If you've got an established house, it will tell you what the property's worth through RP data and what your loan is value. It will then speak to the bank and it'll show us the interest rate that you're on. So we'll be able to establish the interest rate, the equity, and then give you some suggestions around that. It'll show you super, how much balance that you've got in your super, so we can put you in touch with our referral partners, our financial planners. Plus, we've also got accountants, and we can communicate through that platform. We give you the control. So I'm working with organisations because the passion that is within me is that I've got a 13-year-old, a 14-year-old. How on earth is she going to afford a $900,000 property?
Yeah, well, that's right, and that's the scary part.
So you bring it back to what are you spending your money, because there's no cash anymore. There's no physical cash on it, right? So we're working with organisations for breaking them into components. People that want to purchase a property, save money, save even for a holiday or for a car. We'll give you the tool. People that have got property and have got aspirations to then purchase more, we will then empower you with the product and the app to work with us to give you tips and tricks along the way. Plus, we'll be able to probably more intimately know stuff about you quicker.
Yeah.
So working with organisations, because just to wrap it up, a lot of the financial planners can't do this because of the regulatory compliance in their sector. So going into these organisations, because organisations out there, we're working with someone at the moment that's got 300 staff. Now they've got nowadays people then need to work about mental health. So this is just one element. I can't help them with their psychology because
but that's also, it helps them with staff retention.
Mate, in a big way.
Staff, if they're happy and they're financially secure.
So just to wrap it up, what we do is we do quarterly online that the employees can jump into. We'll do a recording, plus we'll do live 30 minutes, how to manage your money better, how to look at first home buyers, what is debt recycling. And then other than that, what we do is we send out monthly newsletters and we'll do one-on-ones in the office with these guys.
Yeah, it's great support. And what sort of cost per person?
So there's no cost to come onto the platform. For the disclosure, it's actually for us to then get people within our inner sanctum.
Okay, I get you.
Yeah. So we pay the fee. So it costs us about $300 per month. But the more people that you have on board, it does increase.
Yeah, of course.
But we don't pass that charge on to the client.
Okay, just so it's actually if they can jump on it for nothing, but they're part of the SW Brokerage family, obviously.
100%.
And then obviously it helps them. Not only does it help them because they're tracking everything and they've got the data available there, but you're also educating them on what they can do,
100%.
whether it's saving for a holiday, saving for a car, children's education, whatever it is.
And that's the evolution of finance broking, right? So you go back to my comment before, why I hate the name mortgage broker.
Yeah, because you're much more than that.
You're more than that. You know, you're more than that. So you don't, and where I think just finally, it's like what I think where mortgage brokers go wrong is like we hear it all the time. I'm not ready to buy a house yet, and I didn't get the service that I wanted from that broker. Well, you probably might be ready in 6 months' time. Well, how's the broker to know that unless they keep continuously keeping in touch? Why don't I empower you with the platform to tell you when? And trust me, a platform will tell me, Phil, I'm about to be in touch with you in September.
Makes sense.
Again.
So tell me, anyone that's thinking about, there's a lot of people out there that say, no, I don't want to take on any debt to start a business. What's your advice to people that are hesitant about debt?
Well, what's the fear? I mean, it all comes back to the belief system, right? So we're all programmed for things that have happened in the past, first and foremost. My suggestion would be is if you don't want to grow, that's fine. But if you do want to grow, you're going to need money, right?
And people don't realise that the cost of money is actually factored into your cost of goods. So, you know, if I buy a new piece of equipment and it costs me $1 million and I borrow, half of that or even the whole million and that costs me, say, $1,500 a month to service, well, then that's $1,500 that goes into my cost of goods but wouldn't you I price my products on, right?
But go back to COVID, right? And how many cafes shut since then?
Well, geez, it's for everyone that's shut, last year was the first time that we had more shut than open. So we're still sitting at about 26,000 cafes in Australia.
Okay. So your question was, had some of those cafes borrowed a little bit of cash and just kept their own money and preservation, would they still be open? Some of them, maybe?
Yeah, well, for sure. I mean, it's a smarter way to operate, right? Whereas a lot of people, right? Sold things down and put it into their business, rather than keep the asset and equity in their residential and borrow against the business. And I think it just comes down to an education, and hence why I wanted to bring you on the show. And we've been talking a lot more around the education piece of finance because this is the stuff that people don't get to see, right?
I've got a cafe down the road. Well, had a cafe down the road from me. I live on the north side. This guy used to do the coffee. It was just convenient because I took my dog for a walk every morning. Well, I take my dog for a walk in the morning. Phil, you would need a tetanus injection to eat from this guy's cafe. Yeah. However, the coffee was just convenient because of my walk. Yeah. Now I've discovered a different place and it's cleaner, more vibrant, funkier. Anyway, you get it.
Yeah.
Now, his coffee wasn't that good for me to continually go back. To come back to your question, had he cleaned the place up, modified it, painted it, and just kept
made it more emotionally engaging.
Oh, yeah. I'd probably still go back.
Yeah.
Now, there's another guy. So he shut his doors.
Yeah.
Right? There's another guy who has just opened his doors. Used to play for the Roy. He's got a bit of a chain there, and it's funky. It's cool. It's opening soon. I will just go back to that normal walk.
Yeah.
Because it's easier. I like it.
Yeah.
So my point is that had that guy either borrowed some money,
invested in his business,
yes, and go back to the mindset just for a sec, because he had a fear around money or borrowing money, Phil, it then came through the fabric with the way he had with the business, right? Mm-hmm. So I'm like, had he had it continuously engaged, people would have been vibrant.
It's energy. People are buying into energy.
Yeah, would have made 100%. So. Yeah, man.
So tell me, if people they're listening to this and they're going through, or they think they're going through, and their perception is a reality, a financial difficulty, what should they be doing?
Well, stop, spend one day out of 365 days of the year. Surround yourself speak to your accountant, come to terms with what you are doing. So from a conscious mindset, number one, engage a financial planner, more the accountant, and a broker. Now, out of those three, I'll say it to you. You'll come to me. Why? Because I don't cost you anything.
Yeah, well, trust.
And I can go to a bank on your behalf. Well, then if you go to an accountant's going to cost you $500 because you've hit the shit. You can't afford it. Financial planner, well, they'll talk to you about it.
So they can bypass you need the accountant to give you the most up-to-date numbers.
So go back to a broker that knows what they're talking about and go, hey, I need help.
Yeah.
Mate, if I can't help you, God, you left and right. So the networking system would be critical. You go to a bank, mate, that bank will not recommend an account.
No, it's a transaction. You're a transaction.
So establish, in all honesty, for any of your listeners out there, mate, swbrokerage.com.au, reach out to myself.
Yep.
And I love this. Because I'm a small business myself, mate. I've been doing it nearly 20 years now.
Yeah, and you've been on both sides, mate. And you've been
time.
in the trenches, you know how it works. And I've seen the work you've done with our clients and with our community and obviously work you've done for us. And you'll help where you can, which is what it's about. But again, I say business is all about relationships, right? There's no such thing as the best product, the best service. But people are all about emotional engagement.
I'll give you a plug. I mean, we've known each other for a long time, and I always, when people talk about you, and I'm always proud to say I'm his mate, but also at the same time, you gave me. I remember talking to you about my first person that joined me. Now we're a team of 13, right?
Which is fantastic.
So, but what I have noticed from yourself is that you need to be very clear with the people that you surround yourself are competent, can do the job.
Yes.
Money for you is, it's
not a focus.
No, it's not. Because it's a byproduct of what you can,
correct.
your superpowers, right?
Yeah.
So what I'm really admiring about yourself is that you know your superpower and you continuously go down that path. Where I think people go wrong, and I've done it myself, they try and control the whole thing.
Yeah.
You can't. You cannot do that. Number two is that making sure that you are walking in the right direction and not running in the wrong one.
Yeah, that's a really, really good point. Walk. And I say, my dad's always grown us up and said, we put all the food on the table and if you shove it all in your mouth, you choke, but everyone's got to eat. So,
100%.
Eat bite by bite by bite and you get sustained. But if you try and shove it all in your mouth and that one about the walking towards it versus running in a different direction is a powerful one because a lot of people do that, right? And that's why I always say start with your outcome. And I don't even use the words goals anymore. I say, what's your outcome? December 2025, what's your outcome? Where do you want to be personally, professionally, family? I now change family to circle because, a very dear friend said to me, well, family, automatically means what about if you don't have a wife or a husband and kids? And so I said, well, actually, it's family/circle. It's the circle of people that you've got around you. And what are your outcomes there? What are your outcomes in terms of, and it comes down to one thing, Barry. I love being in strategic marketing, branding. It's all about psychology, right? It's subconscious programming, it's subliminal programming. What's going on when people don't even realize what are they saying when they don't know what they're saying, and that to me is all about behaviors because what's going on in their mind triggers behaviors, and I love studying that shit. And I say to people, if you have a look at a lot of people that suffer depression or they're lost or they're in a rut, it's because they don't have a direction, because they don't have an outcome, and because if you got no reason to get out of bed in the morning, then you don't need to get out of bed, right? And the reason to get out of bed is know where you want to be in 12 months, know where you want to be in 3 years.
Do you remember we did the, this had a big impact for me. So in our Karaja, in our board meeting, you said it, I think it might have been in February, you challenged us 3 times, the gratitude test. 3 times a day, you've got to say 3 things that
you're grateful for.
That you're grateful for. Mate, that was massive. That is something so simple, right?
Yeah, it's something I still do, right? I've been doing it now for a few years, and you go 3 things every day that I'm, try and do it 3 times a day. Do at least before I go to bed and when I wake up. The 3 things that I'm grateful for. And what it does is it programs your brain to look at it's not that glass is half empty. It's appreciating that the glass is half full. It's not saying I don't have a full glass. It's saying I have some water in my glass.
Well, it's funny you say that. So I just got back from overseas. I went back to Scotland, being obviously a Scotsman.
A big proud moment for you, taking the family.
Lovely. Yeah, it was good. But what I did notice, Phil, being back here is something that when we don't live in the gratitude mindset.
No, we don't.
We do not know how lucky we are here.
Yeah.
We are so lucky in this country. It's not funny.
Yeah, I agree.
And we don't, and it's being back over the last month or so. It's just huge, the mindset out there.
I said it years ago, Barry, and my kids have travelled the world, and I wouldn't have it any other way because I think that's why they're so grounded and mature. Travelling is amazing for kids. It shows them things, and it also shows them the gratitude because you don't know what you don't know, right? So when you get back into this country and you go, why am I paying $6 for a coffee? Well, you won't be saying that when you've paid $10 in Athens, or you're paying $12 in the heart of Rome for a coffee. And people go, geez, it's not so bad now.
Remember, my girls were waiting for a bus, and there was this guy, grown man, going through a bin, right? It happens in every city, but it was really profound because the girls were like, oh my God, you need to see that. Just to have that moment of, do you know how actually lucky that we are, right? But For me, just in summary, Phil, in all honesty, we've all hit the skids. I think you don't want it to get to the point where it's irreparable.
Yeah. And that's why the finance is such a big part of it, because what is it? 98% of people have loans. Would it be that high?
It would be up there, but I find people spend more hours on their annual holiday than they do on their finances.
Oh, that's scary, isn't it?
And I always say to friends, when it comes up, it's like, hey, how much did you pay off your mortgage or your business loan this year? Where's it going to be next year?
And they don't know, right?
They go, I don't know. You're like, okay. But yet, the two traits that I hate in the humans is jealousy.
Yeah.
and you're like, hold on. But if someone else has paid that off and they're driving a nice car or they've got a nice unit or whatever, why are you envious?
Yeah.
Ask them how they did it.
Yeah.
And you're like, I just don't get that. Don't get that mindset, man. I really don't.
And that's why I love what you're doing, especially with your Dosh app and program, is that you're actually helping people. You're giving them a way to become conscious of their finances. And I think that's a great way to wrap it up.
But even if they don't go on the Dosh, right? Like people that come into our realm, and all my crew are the same, right? Because we just drive that home. It's like genuinely help you trying to achieve, the ultimate, whatever that goal may look like.
Yeah, whatever your financial outcome is. I always said, as you know, enough money to do what I want when I want. I wasn't chasing status. I wasn't chasing valuations. I always said, coming from a son of migrants, very humble beginnings, $450 a week my dad used to earn. That was it, right? No brand new cars, no overseas holidays, but great food on the table, had his house paid off within 10 years of being in Australia. And then the rest was spending it on the kids, right? We didn't go to private schools, but we had great clothes that mum used to make because she was a seamstress, great food on the table, barbecues at the beach every weekend, all that sort of stuff. Great family environment. And I grew up saying, I want to have enough money to do what I want when I want.
You have always said that.
And then that's what drove me. But I had that vision. I had that outcome. I had that drive and tenacity. So when I got up every day, I was like, what am I going to do today? What problem am I going to solve? What's going to make me relevant? How am I going to tell an amazing story so that I can achieve? And that's why I've always said money's a byproduct of getting everything right.
Mate, 100%. It is. And for anyone that's listening out there that listens to your stuff, or comes to the Coffee Commune or has the flexibility of contacting you, you're always open.
Yeah.
And I love the positive mindset.
Yeah, it's impact, my friend. And on that note, thank you for sharing your wisdom. Listeners, where your awareness goes, your energy flows. Let that sink in. So let's become more aware of our finances. Let's maybe pause when we're listening to this and go and have a look at our finances and say, hey, where am I right now? Well, how much money comes in? How much money goes out? What is my goal with money? What is my relationship with money? That's something I talk about recently on a podcast. Was what about your relationship with money? What does that look like? How do you use money? Do you respect it? Do you disrespect it? Do you abuse it? No different to alcohol or substance abuse. Where do you sit? Now's a good time to be doing it. Jump on the SW Brokerage website, and their wonderful producer will have that put up on the link. Contact the guys. You heard it there. It's not going to cost you anything. Contact the guys. Get on that app and see where you are. Make it be a snapshot of. Use it as a snapshot to see where you are and where you want to go. Because as I said, where your awareness goes, your energy will flow.
We've got I've got quite a few podcasts and blogs on there for people that want to look
tell us the links.
Well.
Yep.
So swbrokerage.com.au. Just jump on the website, top right hand corner, podcast resources and blogs. Jump on there, mate. There's an abundance of education.
There's some great stuff around education.
So, Money Talks, Wealth Whispers, Phil, and mate, God bless. Thank you very much.
Thanks for being on the show. You've been listening to Barry Wilkinson from SW Brokerage. I'm Philip DeBella. We always bring you people that have been there and done that, and today's been another exceptional show. Until next time, go be the best you can be. That's a wrap for today. Bravo. Keep listening for more episodes of Been There and Done That. The Coffee Commune is here to help accelerate your potential. We want you to be better tomorrow than today. Until next time, you've been listening to Phil DeBella. I'm the founder and managing director of the Coffee Commune, a place where the coffee community comes to collaborate.